Good morning, good afternoon, everyone. My name is Rina Quijada, and I lead the business development and research work for IHS Markit in Latin America. On behalf of IHS Markit, I would like to take the opportunity to thank APLA's organizers for inviting us to participate today. We'll have two colleagues from IHS here based in Houston, Joel Morales, talking about polyethylene and polypropylene and trends, and Terry Glass will follow with some very important information on exports, trends, and logistics, which has become an important piece of market evaluation for current and future market trends. Just some housekeeping comments. During the presentation, feel free to post your questions and we will make sure to reply to them today, or if we run out of time, we will send an email to your attention with the answer. The PowerPoint presentations, we will be happy to send to you if you send us an email requesting it. We'll send you a PDF file through Karen at APLA, or if you'd like to email us directly. With that brief presentation and with so much to cover, I'll pass it on to Joel Morales. Thank you.
Thank you, Rina. So I'm going to spend the next about 15 minutes going over the polyethylene, polypropylene market, and then I'll hand it over to Terry Glass, who will cover logistics and circular plastics. So I'm Joel Morales here in Houston covering polyethylene, polypropylene. And if we jump into the slides here. So it's been a very interesting period of time here in the last 18 months and levels of profitability that we've never seen before and frankly never expected. So as we go into the first slide, let's start with polypropylene. We'll go polypropylene, polyethylene. And the next slide will explain some of the key factors that we're dealing with. So in February of this year, right around Valentine's Day, of course, Winter Storm Uri hit the U.S. Gulf Coast, affecting much of Texas, western Louisiana. This storm was devastating. So we had operating rates for polypropylene in the mid-50s in the month of February, still in the 70s in the month of March. Never seen anything like this. And remember, this was after the market was already tight coming into the year because of the strong fourth quarter demand at the end of 2020, entering 2021. So we've seen prices and margins in 2021 reach levels that we've never seen. Terry will talk about some of the logistics into bringing why it's so difficult to bring material into North America, all of the Americas. And what it's done for both polyethylene and polypropylene, it's divided the world in East and West. And when I say West, I'm talking about the Americas and Europe, where prices and margins are detached to what's happening in Asia. So there's a lot of supply, there's plenty of material in Asia, but you can't get it over to the markets that need it the most and have the highest prices. Now, that's slowly changing, but that's basically the reason why we've seen historic price relationships between both Europe and the Americas versus Asia. For example, the previous record before 2021 in price in North America versus the CFR China price was 36 cents, hit in 2016 and 2018. Well, in August of this year, that number was close to 90 cents a pound. So pretty historic relationships that we've never seen before. Supply is improving in North America for polypropylene. It's taken a while because demand is so strong this year. North America is going to grow somewhere between, we think, 8 and 9%, which is pretty amazing. Strongest year since 2010. But we are finally seeing the markets return into balance here in the fourth quarter. And we do have some new capacity coming on next year. But the story is, because of all this demand globally and in North America, we are no longer nearly as bearish in the short-term forecast in the next few years as we were previous COVID. So as we go to the next slide, you'll see here, this is the comparison of North America price in green, Europe in gray, and the CFR China price in blue. And you can see what I'm talking about, how Asia has not seen any benefit compared to what's happening in the Americas and Europe. And South America would be right in that, probably closer to what the Europe price would be, definitely separated from the behavior in Asia. And the green bars are the differences in price between the regions. And these levels that we've never seen before are resulting in record levels of imports coming into the North American market this year. But frankly, if it wasn't for the high freight, we would have seen this material come in much sooner and prices would have corrected also much sooner. So for the sellers, been a very, very positive environment, lots of demand, problems with supply, and the market's inability to defend themselves because it's so much more expensive and difficult to bring in both material pellets and finished goods. Now, on the next slide, as I mentioned, we do have new capacity coming. I'm going to focus here on the Interpipeline, which is a new 525,000 metric ton, so close to 1.2 billion pounds of product starting in Western Canada, comes from propane to make propylene to make PP. That'll come online, we think, around June, July of next year. And then ExxonMobil with another 450,000 pounds at the end of next year. And then Formosa in 2023. But after that, we're not sure of those projects. One has already been canceled and one looks like it's being pushed possibly to the end of the decade. So there is new supply coming that the market needs and will lead to more competitive pricing here in 2022. So on the next slide, in conclusion, more favorable outlook for sellers. Shipping, very important. Terry will touch on that. PP is not going to be a cheap material. It's going to be used in markets that need it, like nonwovens, automotive. It's going to be used based on its properties and versatility, not because it's a cheap replacement versus PET or versus high density polyethylene. Sustainability is a big deal, but it's more of a longer term issue. For 2022 and probably most of 2023, it's going to be about virgin plastic meeting the strong demand of the world. As we get to the middle and end of the decade, sustainability is a bigger factor. And like almost all products we talk about, mainland China is extremely important because on a percentage basis, no other part of the world brings on as much capacity every year or has as much demand. So if China has another amazing year like it did in 2020, where PP grew nearly 16%, even though global GDP was significantly negative, it really carried the rest of the world. So we keep our eyes very closely on China. So switching to polyethylene on the next slide, it's a very similar story as a lot of the bullets you'll actually see are almost identical. Supply is improving finally. Polyethylene margins have also reached historic highs, and the relationships between North America and Asia have also reached historic highs for the same reason. Winter Storm Uri affected production significantly for polyethylene. You couldn't bring in material from other parts of the world, and they're having the strongest growth year that we've seen since 2010. So really a perfect combination of events to support polyolefin producers in the Americas, because everybody who basically has that shipping gap between Asia and their part of the world is benefiting. Now, we do have some nuances in the North American market. There's some issues with hexene copolymer that are really basically affecting the ability of the industry to maximize production of specific products like hexene LL film, some blow molding grades. So what producers are having to do is they're having to, in some cases, slow down rates, or they're having to make other materials like more butene film or high density, what's called homopolymer for specific grades like injection molding crate that do not use hexene. So we have recovered from the hurricane, but the industry, if you look at the operating rates, we're not running as strong as we should given the level of profitability. And that's because of issues like hexene copolymers, additive shortages, just a lot of issues that were created from the winter storm and the difficulty of bringing in these materials from overseas, and the fact that you have the best domestic demand since 2010. It's all led to a very constrained market, but we are seeing the market finally change. We do have several new entrants coming into the North American market. The first one has already started up in October, SABIC out of Saudi Arabia, a joint venture with ExxonMobil in this Gulf Coast Growth Ventures project in Corpus Christi. That's 650,000 metric ton LL plants, one dedicated to butene, one to metallocene. One has already started, the other one should start this month. And next year, the second quarter, Shell finally comes up in Pennsylvania, 1.5 million metric tons with a focus on the domestic market. You have Baystar, Bayport Polymers, which is the Borstar technology from Europe, first time in North America coming on next year. And you also have Nova at the end of 22 with their LL single site plant coming on, another 1 billion pounds. Last bullet, Formosa Plastics USA. They've been constrained on their ethylene for about 18 months. They finally are done with all their planned maintenances, so they're able to run full. So it's almost like the market gets some new capacity since it's been constrained for nearly 2 years. So we are expecting some changes in the near term. If we look at the prices on the next slide, you'll see once again, North America, next slide, please. You'll see that So real quick, let's just go over the list of projects. Again, that black line separates what's just coming on in the future. And I mentioned the plant in Corpus Christi, 1.3 million metric tons, Bayport HD, 625, Nova at the end of next year, 450. And then Shell also next year, 1.5 split between LL and HD. So next year is the last major wave for North American new capacity until later in the decade. So nothing has been FID'd, nothing has started. Well, Dow had an announcement for their plant in Western Canada, but that's towards the end of the decade. So after this year, we probably won't see anything start up for at least 2 to 4 years, would be our estimate at this time. But next year is a pretty significant wave. All right, on the next slide, we'll take a look. Once again, very similar picture to what we saw for polypropylene. You have North America there in green, Europe in the light blue, and China there at the bottom. China, again, has not benefited at all during this COVID, better demand around the world. The fact is producers in that part of the world have been stuck having to play in China because they can't get to the other markets efficiently. And therefore, China remains a very competitive market. Meanwhile, because of the difficulty of bringing in material and the supply disruptions in their respective regions, both Europe and North America, especially North America, they've been able to raise price and margins to historic levels. Next slide, please. So in the end, for polyethylene, if you look back to what we thought before COVID and what happened after, there's actually more demand in the forecast for 2020 through 2025 than we were thinking before. And when you consider the GDP, how poorly it performed in 2020, and you compare it to what happened back in 2009 after the fourth quarter meltdown of the financial crisis, it's pretty phenomenal the amount of growth that we've seen around the world. It's been well documented. Consumer behavior changes, increased single-use packaging because of hygiene concerns, online shopping, work from home, more consumption, takeaway packaging from restaurants, the list goes on and on. So just a tremendous pull on virgin demand here in the short term, much better than what we were thinking pre-COVID. We're watching the hexene issue for North America that will affect exports of certain products outside as a result. So basically, until this hexene issue is resolved, we expect less hexene exports coming out of the US with a focus more on the domestic market. Even after prices correct here in our forecast, it is still at a much more profitable level than previous corrections if you look at Hurricane Harvey in 2017 and other types of cycles in the past. And we're forecasting a better landing point because of the increased cost of freight longer term that Terry will get into. So a more favorable look longer term. Next couple slides, if we look and compare the prices here for other materials. Next slide, please. Before we get to that slide, just if you want to compare how similar the behavior was, even though GDP was positive in 2019, plastics was slowing down a bit with the sustainability push in North America, similar negative performance for PE and PP. Then in 2020, despite negative GDP of near 4%, both PE and PP grew. And then 21, and actually the numbers will be better than this as we're finding out here with the latest data. PE will be closer to 5.5, 6, and PP will be closer to 8 to 9. So just a phenomenal year in 21, followed by, again, another strong year in 22 because of the expectations of positive GDP. So virgin plastics looks really strong going forward. Next slide, please. If you compare the major plastics that we follow, all of them are elevated in 2021, most of them with the exception of PVC correct in 22. And looks like the best value in 2022 will be high density, which is why when I talk specifically about polypropylene, I think folks who use it will be using it based on property, not based on cost. And my final slide here, in conclusion, PE and PP prices have peaked. Next slide, please. prices have peaked, margins have peaked. We are going to correct. 21 demand is very impressive. We're not going to see it going forward, but we're going to see strong demand off a much bigger base. So 21 increases the base for polyolefins, and then we still have positive growth. Big deal with global shipping, which I'll let Terry allude to. Sustainability is a big deal. It's just not that big a deal near term because it's just not the right size and scale to meet the market needs. And lastly, materials based on property. Looks like high density has a bit of an advantage going into 2022. So with that, I'll pass it on to Terry.
So we're having a discussion now on the freight rates, and the focus is going to be primarily on the freight rates out of Asia coming to the Americas. That's where there has been a tremendous spike just within the past 12 to 18 months, where a $10,000 change in freight rate is the equivalent of about an 18 from Asia into the Americas. So you can see on the first slide on the box on the upper left that just within a year's period of time, there's been a 165% increase in freight rates. One would have to ask what's driving these fundamentals and why is this occurring? There's many, many factors that are involved here. But suffice it to say that it's not going to be changing significantly downward anytime soon, that some of these fundamentals are going to be around for quite some time. So the fundamentals include things like consumer buying behavior that has changed during the pandemic period with COVID, where e-commerce really did take a huge jump forward, and it looks like it's going to continue to sustain on a very much higher level than what it was pre-COVID. We can see investments by companies such as Amazon, where they have increased their capacity and inventory levels by 35% just in the past year in order to meet that buying behavior delta that has occurred during the COVID pandemic. And they're of the view that that's going to continue to hold very strong. So the shipping industry has seen a huge surge in containers, demand for shipping product from specifically China to the United States, but as such, that's put a strain on the whole supply chain dynamics. There's also been elements of port congestion due to COVID worker shortages, and particularly in China's where they have zero tolerance policies on any kind of a COVID exposure or COVID infection. You can see a port shut down 75–80% of its normal capacity for a week at a time. And when that happens, you have ships just having to sit outside of the ports, accumulating and waiting for their turn to get back in for unloading or loading of the material. Just looking back historically, the Asia freight rates to the US was somewhere around 3 to 4 cents back in, say, 2018. And now it's running around 25 cents, with some cases reported up to 45 cents per pound. I think, as I said earlier, a $10,000 freight rate charge adds about 18 cents to the cost. Container availability is also an issue, and it's even starting to become an issue in the US. It's not so much that there's a lack of containers, there's just a lack of movement of containers. Chassis shortages, again, driver shortages, problems with inventory management, with some of the converters that are holding on to higher inventory levels, holding on to these containers, and the turnaround times on containers is a lot less. So there's other variables around that availability of containers and chassis that has particularly been a problem in the US. What's interesting also to note is that, yes, there is additional capacity being built. We will see new containers and new ships coming into service in the next 2 to 3 years. But what also has to be understood is that the IMO 2023 regulations that will be implemented for environmental emission purposes will more than likely result in the shipping industry running at less efficient run rates. In other words, instead of having to take 10 days or 12 days to transport product from China to the Americas, they may be taking 14 to 25 days because they'll be running at slower rates in order to meet these emission guidelines. So the efficient or effective capacity of container availability is expected to drop in 2023, even though we will have additional container units available. The other thing that's probably worth noting is that the shipping industry, if you were to go back and look, say, just 10 years ago or 15 years ago, the top 10 companies only controlled about 18% of the market. And it was a market that had very little to no profitability. Everybody was fighting for market share. In the last 4 or 5 years, that industry has greatly consolidated. And now you have the top 10 shipping companies own or operating or controlling 80% of the market for transportation logistics. And that's giving them a lot more power around pricing fundamentals. So there is another fundamental change that's probably going to continue along those lines. Now, that being said, it's also worth noting that regulations are starting to kick in that may have an effect on some of these, I wouldn't call them monopoly, but some of these conglomerates and relationships that are developed in the shipping industry. So that's something that needs to be watched carefully. Just the lower left-hand side graph shows you, the demand spike that occurred in 2020, and then the supply container capacity shortages, and how it still will look to be somewhat short going all the way out through 2025. Next slide, please. This just gives you an idea, again, of the container capacity and demand growth curve that is currently being forecasted, that has occurred in the past. And you can see that there has in the past been additional capacity versus demand historically, and that is definitely not the case now. So we are in a new paradigm on the transportation and freight container dynamics that are going on in the marketplace today. And on the right-hand side gives you a good idea of the new builds that are coming into service, and you can see that they're looking at around 2021 bringing in another 4 or 5% of capacity, but that's been about the average over the last, say, 5 years of, say, 4 to 5% of additional capacity of containers coming online. But you can see that the percentage of the new capacity that's a part of the overall fleet, as they start taking ships out of service, that these new units or new ships that are coming in are going to have a much greater impact in the overall fleet efficiencies. Next slide, please. So just to summarize things, the bottleneck is caused by the pandemic. Certainly that has been a key driver, the congestion that has occurred, particularly in locations like Long Beach, California, and in the Asian countries, Singapore, et cetera. So the question now is how long will this last? And the forecast that we are seeing is at least through 2023, we think that the freight rates are going to stay pretty well where they are today, and we'll see some slow movement downward from 2023 through 2026, but it's not going to get back to where it was, say, pre-pandemic levels. We think we're going to be in a new paradigm. So the significance of this is that as we look at trade patterns, globally, the increased cost to move product from one region to the other is going to likely cause a shift. Next slide, please. Just a quick comment about circular plastics. It's a new service that IHS Markit is bringing to the market. If you would, next slide, please. So the issue that the industry is trying to address right now to be the most vulnerable for environmental concerns, and where there will be some regulations, both from a government and local community standpoint, whereas other applications like ag infrastructure, building construction won't be as impacted as some of the single-use packaging applications. Next slide. So when we look at plastic circularity, we'll just quickly go through. This is just a list of the questions that as a participant in the industry, you need to be thinking about long-term, particularly with respect to how are you going to adjust your business strategies to address the strengths and weaknesses of plastics and the market segments that you're going to participate in. So next slide, and final slide. So IHS has a new service that we're offering now. It's called the Circular Plastic Service Overview. And basically what we have is a scenario analysis put together that addresses the 4 or 5 major components of plastics circularity, waste disposal, waste collection, the economic and environmental assessments, how does mechanical recycling compare to chemical recycling, and what stages of the development of the different technologies are at currently, and when will chemical recycling play a major part. So with that, I just wanted to offer this as a service. It's available. If there's anyone interested, please reach out to us. That's it.
Wonderful presentation. I think you can't look at plastics today without talking about circularity. So that's going to have an effect in their supply-demand balance and the trends in the future. I was wondering, we don't have that much time left, but Joel, what do you think needs to happen for polypropylene and polyethylene prices to return to some sort of normality? One of the comments we're hearing from the participants is that this is a crazy market. So what do you think should happen for this to at least return to some type of normality?
Sure. So there's always a bunch of factors. You know, oil's been up $10 in the last 6 weeks, raising the overall global price. And I think from a buy perspective, to get back to a lower level of what, quote, normal pricing, what we're used to the last few years, you probably need oil to retreat a bit. You need demand to cool off. So we're not growing so strongly, and producers, their inventories build a bit. And you also need to be able to defend yourselves by getting access to imports at the similar price levels to the past, which we really don't think is in the cards for the reasons that Terry suggested. So we are going to a new normal, but it's going to be elevated versus history unless demand falls apart, oil falls apart, and global shipping rates fall apart quickly.
Which is not very likely to happen.
Unlikely in the near term.
Yes. So Terry, in your case, do you see trade patterns changing because of all the logistics? I mean, will countries try to, do more with the US, less with Asia? What's happening in the trade patterns?
Well, certainly, yes, we are seeing some changes in the Asian market. So the Americas are somewhat now segmented or separated from the Asian supply because of the freight rate issues. And what we're seeing now is that a lot more trading is going on interregionally within the Asian countries. So we'll see product from India or product from Vietnam now moving into China as opposed to any products from the US. That means that the Middle East is also going to be looking at the China markets, and that opens up Europe a little bit, but the Americas is going to continue to, as long as these freight rates stay the way they are, they're going to continue to be isolated.
Okay. All right. Excellent. We are right on the top of the hour. Thank you so much for your insights on the plastics business, and we hope to see you live 2022.
Absolutely. Thank you so much, everyone.
Thank you, everybody.
See you guys.